Hey guys, I promised you I was going to make a video for the review test. So hopefully this video will help you be prepared. Now, this video will focus on the math aspects of the test. There will be some questions on the test that ask you, hey, compare one person to the other person, or compare moving to country A versus country B. Those questions, I don't have it on this review because I think that's more interpretation questions. What this review is going to be focused on, particularly, is calculating the math aspect of it. So, hopefully, this math review helps you do the math aspect. And then you could do the interpretation stuff later, which is like if country A charged me $10,000 in taxes and country B charges me $5,000 in taxes, which country should I go to? Hopefully, you obviously say B because they charge me less taxes. I'm not going to have any of that on this review. This is the same review packet as I posted filled out on the Google Classroom. I'm just going to refill it out by explaining everything, and you could slow down, review, watch back, whatever you need. Okay. So let's start this. First off is tax brackets. And I know tax brackets, slash, I've been calling them buckets, is the same, works the same, have been difficult. So I recommend when you get the tax bracket, when you start these problems, is just figure out how much does it take to fill each bucket or each bracket. So for the first one, since it's 0 to 20,000, hopefully you can see that's only 20,000 or 20K. But in the second bucket, it's 20 to 50. So I would do 50 minus 20, and I know between 20 and 50 is 30K. So to fill the second bucket, I would need 30K. In the next bucket, this is 50 to 90. So from 50 to 90, that's 40K. So I need 40K to fill the bucket. The last bucket goes to infinity. Because it goes to infinity, I could fill the bucket forever. If I made bajillion dollars minus 90,000, the rest is going to go into the fourth bucket. So let's talk about number one. Bill makes $50,000. How much taxes does he pay? So because he makes $50,000, I'm going to start with 50K over here. Now I'm going to go to my first bucket. The only reason why I'm drawing it like this is to help visualize how much it goes in. You don't need to draw like that if you understand the concept. So I'm going to put 50K into this. The bucket can only hold 20K, which means I'm going to put 20K in that one bucket, which after I put 20K, I poured 20K into the bucket. I only have 30K left over. Now let's go to the second bucket. The second bucket over here is 30K. Now the second bucket could hold 30K. So 30K it holds. I have no money left over, so there's nothing to take out. The bucket is full. Or I ran out of money, I guess you could think of it. So now how do I calculate? So the first thing, now I've been using K the whole time. When I start calculating, I like drawing out the numbers. So I know $20,000 because of this 20K is going to be charged by the percentage in the first bucket, which in this case is 0.1 or 0.10. Remember, you have to change it to decimals in order to work with it. This is going to be 0.15 over here. This is going to be 0.3. This is going to be 0.4. So 20,000 times 10%, that will be $2,000. Now I'm at my second bucket. My second bucket, I'm putting in, I saw that I have 30,000 in it. So 30,000 times 15% or 0.15. So 15 times 30,000 will be 4,500. Add that together. In total, he will pay 6,500 in taxes. So that's how much he pays in taxes. Sometimes I will ask, how much does he keep? Or how much money do they keep? So to figure out how much money to keep, all you do is take your original amount. This is how much he earned, 50,000. And I subtract it from how much taxes I got to pay because I don't get to keep my taxes. I have to give it away to the government. So 50,000 times 6,000 or subtract by 6,500 is 43,500. So he gets to keep 43,500. Let's talk about number two, Bob. He makes $10,000, but he's in the same bracket, so we're going to still follow the same buckets. So 100K, that's going to go into bucket one. And then 100K, I only could put 20K in the first bucket. We figured that out earlier, which means I'm going to subtract 20K from the 100K, and I have 80K left over. In the second bucket, I'm going to try to fill it up. I fill it up to the brim. There's 30K. I'm going to take that out. 80K minus 30K. I have 50K left over. In the third bucket, I'm going to put in 40K. Put in 40K. Pour it in, pour it in. I didn't use all it up. So I have left over 50 minus 40, 10K. And the fourth bucket, which is unlimited bucket, it can hold forever. 10K, I put it in. There's 10K left over. I only could put 10K in the bucket because I only have 10K. The bucket to technically hold infinity, so it doesn't ever fill up. The endless bucket. So, with that in mind, I'm going to now calculate. From bracket 1, it's going to be the 20K I found times 0.1, and that's 2,000. If you notice, that's the same number because in both situations, they filled the bucket completely, so it makes sense that the number is going to be the same amount of taxes. Bucket 2, 30,000 times 0.15, that's 4,500. Bucket 3, 40,000 times 0.3, because it's 30%. That's going to be 12,000. And bucket 4, there's only 10K in bucket 4. So 10K or 10,000 times 0.4, that's going to be simply 4,000. I'm going to add that up, which means my total should be 0, 0, 5, 2 plus 4 plus 2 plus 4, 6, 6, 12, carry the 1. $22,500 is how much he pays in taxes. If I ask how much he keeps, you're just going to take 100,000 minus it by the money he pays in taxes, so 22,500, and that overall is going to be 77,500, and that's how much he keeps. Here's what we did in T1. Let's talk about deductions and credits. Deductions, you remove it from the, I says taxes here. Maybe I should say taxable income. So what you made. And then credits, you move from the tax value itself. So Bill makes 50K, but has a 15K deduction. How much taxes does he pay? And how much money does he save compared to number 1? So if he paid $50,000, but he only gets taxed at 15K. So with that in mind, he's only charged for $35,000. I'm going to cross this out, how much money he compares to save 1. And to make the question easier, because we just spent time looking at the buckets, and I'm going to have to go back to buckets again on short and long-term investment. We're just going to, okay, he has a flat tax rate of, let's do 18%. Okay. So in this case, how much money he makes, is a flat tax rate of 18%. So what we have to do now, I'm just checking if this is still recording. What I have to do now is calculate the tax. On this section, there will be a flat tax rate, so I'm just going to do that. So I only write the 18% base off the flat tax rate. Notice I'm not charging 50,000, but I'm only charging 15,000. So 35,000 times 0.18, which I need a calculator for that, is $6,300. So $6,300 he says, or how much he pays in taxes. Again and again, if I ask how much he keeps, he made $50,000, but he paid 6,300 in taxes. So that's going to be 43,700. That's how much he keeps. So for this one, again, I'm not going to compare. Let's just do a flat tax rate. Let's do a flat tax of 18%. Bob makes $100,000, but has a credit of $2,000. How much does he pay in taxes if the flat tax rate is 18%? So something like this, Bob makes $100,000, but because this is a credit, I calculate the tax normally. So 100,000 times my flat rate of 18% or 0.18, that's going to be $18,000. But because my credit is $2,000, I subtract it after I calculate the taxes. So 18 minus 2 would be $16,000. That's the taxes he pays. And the money he gets to keep is 100,000 minus 16,000 is going to be 84,000. That's how much he gets to keep. All right. In number 5, Corey has a choice. He can make a $10,000 deduction or a $3,000 credit. Which should he pick? So this is like a comparison question, which means you're going to use the same number and you're just going to do both. And let me just say, instead of using the table, he has a flat tax rate. Let's say, let's do 14%. Okay. So first, let's do the deduction version, which remember, you take out from his taxable income. So 60,000 minus 10,000 means he's only taxed on 50,000. So 50,000 times 0.14, that's going to be $7,000. So he's only taxed at $7,000 if he picks option with the deduction. If he takes the $3,000 credit, what he has to calculate, it's going to be $60,000, which is his normal income, and times it by 14% or 0.14. And that's going to be $8,400. But then, because he has a credit of 3,000, I subtract that from the tax itself. So 3,800, that means it's 5,400. So in this scenario, which one should he pick? He should pick this one, the credit, because he pays less taxes. Okay. Normally, when you get a paycheck or whatever, the taxes automatically are taken out of your money. So we have to figure out on April 15th, do you get money back or do you have to pay taxes? So this is called filing your taxes. So in order to calculate that, you figure out how many taxes you owe and how many taxes you already paid. And if you overpaid, the government sends you back money. If you underpaid, you got to send the government money. So we use this formula T minus P, which is simply tax owed minus tax paid. If it's positive, you have to send the money to the government. If it's negative, you get money back. So let's talk about it. Bill made 70,000 in a year. So 70,000 in 1 year. The tax rate is 20%. He already paid 1150 throughout the year. How much does he owe money or does he get a return and how much? So Bill made 70,000 a year. In this case, the tax rate is 20%. So in this scenario, I want to figure out how much taxes is owed. 70,000 and he needs to pay 20% of that in taxes. So he owes, or the government expects to receive, $14,000. Now, how much did he pay? In this one, they just straight up tell you he paid 11,500. So nothing special. Which means I could do 1,400 minus 11,500. In this case, he has to subtract this. This is going to be 2,500. Yeah, 2,500. That's how much is owed. So he's going to have to send the government $2,500. Remember, if it's negative, that means the government sends him money. And number 7, Bob makes $3,000 a month, but only works 9 months a year. Each paycheck they take out 15%, $500. His tax rate is 15%. How much does he owe? Or does he get a return? So this one, we have to do a little work. We have to calculate how much money he made this year. So first, it's $3,000 times how many times he got paid. So he got paid 9 times because he works 9 months of the year. So that means in total, he made $27,000. But that's not how many taxes he owes. I have to then times it by 0.15. So I got to do 27,000 times 0.15. That's going to be 4,050. That's how much taxes he owes. But he paid every paycheck $500. So 500 times 9, he already paid 4,500. So we still do the same thing. 4050 minus 4500. That's going to become $450. Negative $450. Which means he should receive, or he gets a return. I guess I'll call it a return because that's what we call it in real life. He gets returned $450 from the government. So the government, after you file your taxes, they'll send you a check for $450, or depending what program you use, they sometimes just direct deposit it. Okay, short-term and long-term investments. Short-term and long-term investments are just bucket questions, but you just have to be careful because you have to calculate the profit and you have to figure out which box am I using, which bracket. Because that, we only get taxed on profit. You only get taxed on the profit. So if I spend $10,000 and I get out $15,000, I only made $5,000 because I already paid $10,000. So I only get taxed on the $5,000. So you got to remember, you only get taxed on profit. So Bill bought a stock for 10K and the company was bought out next month and the stock is worth 70K. How much taxes would he pay if he sold now, and how much would be his profit, aka keep? So first, he paid $10,000 and he's selling it for $70,000. So 70 minus the 10 investment that you did earlier means he only made $60,000. So he only could be taxed on $60,000. In this question, it looks like it was bought out next month, which is less than a year. Long-term investment is more than a year. Short-term investment is less than a year. So since it's less than a year, we're going to use the short-term bucket. So 60K. We're going to take that. In the first bucket, it looks like it could hold. Oh, I guess you should calculate how much it could hold. This is 10K. This is 20K. I think it's the same from the earlier page. Yeah, it is. Yeah, it is. 40K. No, it's not. It's different, actually. And this holds infinite amount. So the first bucket could only hold 10K, which means I have 50K left over. In the second bucket, it could hold 20K. So I have 30K left over. And in the fourth bucket, it could hold, or the third bucket, it could hold 40K, but I only have 30K. So only 30K goes into the bucket. You're doing the same bucket method as before. $10,000 times the percentage, which is 0.1 in this case. So that's $1,000. $20,000 times the second bucket, which is 0.15. That's going to be $3,000. And then the third one, $30,000 times 0.25. That's going to be 7,500. Add that all together. He pays in taxes 11,500. That's his taxes. Now, how much does he keep? Now, for this one, you have to make sure this is the profit, but he has $70,000. Like physically, he has $70,000. So from the $70,000 minus the 11,500, that means the money he gets to keep is 58,500. And that's how much he gets to keep if I ask that. How much would be his profit? I guess would answer that question, which would be 58,500. Maybe I should change that. I want to say profit. I would say keep. How much would he keep? Okay. Now, if Bill held it for more than a year, the price stayed at 70K. How much would he tax he pays then? How much would it be his profit? So in this situation, because it's more than a year, it's going to be the long-term investment. So we're going to use that bucket. So again, the process is still the same though. 70,000 minus the 10,000 he invested means we're only taxing on 60K. The buckets are a little bit different. This bucket holds 40K. This bucket holds 60K. And this bucket holds infinite amount of money. So starting from 60K, the first bucket could hold 40K, which means I only have 20K left over. The second bucket could hold 20K, or it could hold 60K, but I only have 20K, so I could fill it up with 20K. I cannot put it anymore because I have no more. So in this case, $40,000 times 0% in this case, or 0.0, I guess. That would be $0. So the first 40K is quote unquote free. Then 20K times 0.15. That's going to be $3,000. 0 plus 3,000 is $3,000. That's will be his tax. And because that's his tax, we're just going to figure out what he keeps. Again, keep, right, instead of profit, which is going to be 70,000 minus 3,000 is 67,000. So for him, it's definitely a good idea to save it because if he held it for longer, he saves a All right, Bill makes $10,000. He puts it in the tax. The country tax rate is 15%. How much money? And you make 10% a year. I don't know why I stumbled. Let me start again. Bill makes $10,000, okay? And he's going to put it in a retirement account. These are both retirement accounts, IRA. His country has a tax rate of 15%. If the money he makes on the retirement account is 10% a year, which should he choose? Okay. So the first thing we're going to do is figure out in traditional IRA, we pay the taxes at the end. So he's going to put in the money directly into the investment, which to calculate investments, which we did before, and we're just going to keep it to simple. So P times 1 plus R to the T power. So in this case, he puts all $10,000 into the bank. So 1 plus 0.1, because it's 10% per year. That's from this guy. And then it's going to be for, I never said how many years. So say 15 years. No, I already used 15. Let's do 12 years. That's my fault. I don't think I said years. So let's do 12 years. So 10,000 times 1.1 to the 12th power. That's going to be, and remember to round, 31384. So 31,000.28. Okay. So that's how much money he has at the end of the retirement after 12 years. Now, how much taxes he needs to pay? First off, remember he only gets taxed on profit. So 31384.28. I got to calculate the profit. So I got to minus the 10,000 you first put in. So you put in $10,000, you got to subtract $10,000. No, there's no 20 on that. So that's going to be 21,384.28. This is how much profit he makes. Again, you only get taxed on profit. Because that's the profit he made, now I could tax that by the tax rate of the country, which is 0.15. And that means the taxes he's going to pay is 3207.64. So that's how many taxes he pays. How much does he get to keep? Well, he has 31384.28. And he got to pay in taxes 3207.64. Let your calculator do the work. Why do the work for yourself? 31384.28 minus 3207.64. That's going to be 28,176 and 64 cents. Yep. So that's how much money he keeps. Okay. Now the Roth IRA, I think, is the easier of the two. We're also going to say 12 years. I think it's the easier of the two because you calculate the tax first and then you just do everything normally. So I have $10,000, but I got to pay taxes on that. So that's 0.15, which means now I have that is $1,500, which means if I calculate how much I lose, 1,500 away from that, that means 8,500 is how much I keep after taxes. I don't want to say keep at the end, but now I use the same formula. But in this case, I start with 8,500, 1 plus 0.1 to the 12th power. So 85,000 times 1.1 to the 12th power. So this is 26,676.64. In this situation, I don't need to calculate how much he keeps because I already paid the taxes earlier. So this money, 26,676.64, that's just how much money he keeps. Straight up. No need to do any more calculations after that, which might be nice for some people. People might like that. I don't need to calculate the profit because I'm not even getting taxed on it. So no need to calculate profit. I'm just happy with this number. This is how much I keep. Based off this situation, I would say I would pick the traditional IRA because I make 2,000 bucks more. In real life, there's a lot more factors like in 20 years, are the taxes going to be different? Is investment going to be the same? Do you compound more? Can you get more than 10% a year? There's a lot of different factors in real life. But you don't really care about that. It's just a test. Yeah. I hope this helps. I hope you feel better about this. I hope this really makes you feel confident for the test. Good luck and have a wonderful day. Some might call that perfect timing.